Hello, YouTube. There is a trap that is being set. The question is, who is going to win it? And I say this because the last time we had a push off of our downtrend, like we did back in August, it looked very, very similar. We carve out a bottom near the bottom, and then we push up. We did that exact same thing coming into this week. We carve out the bottom, and then we push up. So we now have two consecutive daily closes over the downtrend, one and two, and then over here we also have our one and two. So the question is this enough? Are we starting a reversal, or is this just another chance for the bears to sell this off? Because we're noticing some competing signals here. When we look at the 2 and 10-year note and the dollar, they're all pointing up. So the 2-year note is up about 1.2% today. The 10-year note, that one's notable, up about 3.25 after getting lower tails. And the dollar is also up, bouncing off its previous high. So I don't know. There's 100% a trap being set, and I'm just not sure who's going to win it, to be honest. So I want to show you one more perspective here, and this chart here should help to really try to smooth the data out. We looked at this one yesterday. It's a quarterly chart. We're now going to remove everything. We're going to grab a magnet with a horizontal ray, and we're just going to snap it here on that quarterly high we're watching. So this is like really simple for us. If we understand technical analysis, we know here that we have the high we're looking at, which pretty much forms my, again, like the start of a head and shoulders here. So if we're going to go higher, we poked above it, 378.46. That's the high. What's our high of the day today? 379.46, exactly $1 higher. Also, we have a lot of digestion here, right? We have to digest these areas, including the close from the first quarter at 377.25. And then we also have the open here at 376.56. Those levels are also doubly important when we now look at our daily chart again, and we realize what also happened on the leg down that we had right here. And right here, I'm talking about where the arrow was going back to September 21, 22. What do we got? 37738, and we got 37658. That's correct. So the areas we're at right now are so important. So are we making enough progress? Well, yeah, we're making pretty good progress. And I'll tell you the reason why. I'm noticing a significant change here. Other thing we talked about yesterday was the gap that was left, even though there is this lower tail now, right? Gotcha. If you were bearish hoping for the gap fill, I think there might have easily been a trap set today because without this lower tail, I believe the low of the day is right around the open at 372. So maybe 372.3 was a low. I'm actually really curious now. Let's look back to yesterday. The low on the open is 372.4. The low is 373.31. So yes, we did actually go below yesterday's low, which means anyone who shorted yesterday was at 1 point green today if they managed to position properly, but now they are not. And this looks a lot like a white soldier. If we remove the tail here from the dark pool print, this looks like it's actually a bullish engulfing candle, not a white soldier. It's a bullish engulfing candle. We closed a little bit red, right? Oh my goodness, down by 0.23. Yeah, but we were down like 2% near the open. It's been a violent session. And QQQ also really notable. And when we look at Qs, we can also look at our quarterly chart, but more importantly on the daily chart here, we actually came down to fill most of the gap. 275.16 is the high. Our low today, 275.42. So we're off by about, I don't know, like 25 cents ish to fill that gap. And we've actually stopped going down as well. We now have 2 consecutive daily closes over the downtrend, just like before. This time we are way below the 50 DMA, currently at 303.41. So they look very similar. We now want to look at our 3-month chart, and then we're going to look at just a few more things because I think that I really want to try to keep today's story simple. But on the weekend, I was getting pretty bearish. I'm like, well, we're not going to get above 363, and you have to realize at what point your thesis is incorrect so that you're able to take advantage of the opportunity. So when we look here to the high going back to July, I believe that's the same one we're looking at here. Let's just double check. We're looking at the October high, actually. So the October high, it's even higher. Before we get there, we will have to get through this first one. So we can look at the high right here at 303.5, which is actually going to be our 50 DMA as well. So if we're going to start going higher, pretty much seems like the next stop. We got 297 here is the low. But we can shoot up like another 20 bucks here. Come up here, test this area. Might push off, might go higher. This is a 3-month candle. We're 3 days in. Woof. That's right. Woof. So now, if we understand all the significance of everything we've looked at, I want to focus in here on two numbers for both these charts. The 200 weekly moving average and the 50 monthly moving average. So before we look at a monthly chart, we can understand that we got like really close to testing these areas. So now we're just going to show you the monthly chart. We got like really close to the, excuse me. We got really close to the 50 monthly here on the Qs. Yeah, within 30 cents, 26753. The blue line here, which is going to be the blue number, 267.23. So this just looks like a powerful push off of the 50 monthly moving average. If we look at SPY, it just looks SPY only had to make it to its 200 weekly, and there's still room to its 50 monthly. So this just looks like the NASDAQ pushing and pulling us all around. That's the first thing I want to point out. And then if we look here at the 50 monthly versus 200 weekly on SPY, we also note that we have a green line and we have a pink line. So we only came down to test the 200 weekly. So that's just where we found buyers. And if we're going to get the Fed pivot, which is a lot of what this looks like, and we'll look at the data in a moment, this is kind of what I would expect. Hit the 200 weekly moving average, and then just a massive bounce. And taking out key resistance areas, notching in like 6% in 2 days. Oh my goodness. The bulls who had the patience to ride this rip, they are incredibly thankful because this has been beautiful. And our algo is actually giving 400 plus swing trade alerts currently for this week. And there is tons of opportunity out there. So if we keep all of that in mind and we think about the push off that we have now, I think going into Friday, there's going to be a catalyst, but what's getting harder to know now is whether or not good data is good data and bad data is bad data. Why do I say that? Well, I say it because this morning at 8:30, we got an ADP non-farm payroll print actually coming in with a beat at 208. We are only expecting 150 for the official number coming out on Friday, but people watch this number. At 8:15, it came out, and it came out with a beat. Previous number revised up as well. That's not good. And then we look at the data that came out at 10 o'clock. We had, 9:45. We got services PMI come in with a slight beat. And then we got ISM manufacturing coming in with a beat as well. So green numbers mean beats. Does it look like we had a beat today? Nope. It looks like for some reason, the charts wanted to go up. They were on a preset course, almost like there was a bullish pattern unfolding here. And if we look at the ES on the 1 hour chart, we note that we broke out of our channel, which is going to be the top line right here. And we formed a cup and handle pattern. We also note that we came down to back test the breakout, test the 50 MA, test the previous top at about 37.30. Our low of the day today is 37.34. So that pretty much just looks like we're completing the bullish pattern here. We're putting in the inverse head and shoulders, bouncing off the 50, bouncing off the previous top, and just looks like it wants to go higher. That's classic bullish. So what I would look for next would be the reaction to 38.50. I want to see if it can actually punch it up into here, and then we should back test 3,800, build up some steam to test about 39.20, and then just keep push pulling higher. This is kind of like a really important area here at 3,900. So if we can manage to stair step higher by just putting in progressively higher lows and higher highs, that's how we go higher. We climb the wall of worry until there's nothing left to worry about. And yes, we're still in fear. We were at, I don't know, like think like 11 not that long ago. It's only been fear for the last 12 months. So yeah, like we can go higher. Are we going to? That's where we now need to look at the 2 and 10-year note and the dollar, because we're going to look at a weekly chart now. 1 week, we're going to look at DXY first. Actually, sorry, I'm going to finish off the data here, then we'll come back to the chart to finish it off. So this is so important because we did not get the reaction we have for the rest of the week. When we get a good print, we go down, right? Good data is bad. When we get bad data, we went up. So if for the first half of the week, meaning Monday, Tuesday, and now it is, I believe it's Wednesday. Yeah, it's Wednesday today. If for the first like 2 days we reacted the way we would expect to, and now we're not, it just means the market doesn't really care. It just wants to go up. And I think I know the reason why. I think it's because of this pain trade we currentently see in the E-mini futures I just looked at. So we note that we went from 281,000 contracts short 2 reports ago to now only being at 150. I don't know what this number is going to be on Friday, but man, this is getting painful if you're on the wrong side of the trade. That's what this looks like. Looks like a pain trade. And looks like the trap is set. And whether or not we actually have the data to support it, the shorts that are on the wrong side, oh boy, are they getting juiced. So if the shorts are going to reload, we'll get this print at 3:30 on Friday for the final stream. For the final hour stream we do for you on Friday. And otherwise, two more charts for us to look at. And I think something that really tells a story for me today is also the options chain. So I want to show you the options chain for today. And we look here at roughly where we closed at 377. That's kind of what I was eyeballing for max pain, because woof, we got like these massive puts here, and they managed to burn all these calls. So we're actually building a tool right now, which is going to provide you max pain, and we'll be launching that in the next coming weeks. But for right now, 377 looked like it was really the number to maximize it. They still paid out quite a few calls, but getting it down to 371 today means they had a chance to scrape it all. So that pretty much explains the power slam into the close. I thought we were going to close with a green close, but we didn't quite hold it. 377 was max pain. It just means the market makers are still in control. And now when we look here, we note that, well, they're probably also getting to work for these 380s for Friday. They're still worth about 230. Tons of volume on them. There's also open interest. So I'm watching this area going into Friday, which is also 380 plus roughly $3, which is what they were worth overnight. So that's how we make it to the areas I pointed out on SPY. And then if we have a final look here at the daily chart for the 2-year note and the 10-year note, these are going to be important just because we note that we're currently we're currently putting in a flag, right? So we went up massively, pop flag. We have lower tails. Every time we go below 4.1, they buy it up. And every time we try to rally, it fizzles. So that's what a flag looks like. I don't know which way we're going to go. Technically, what normally happens is the bond yield leads the stock market. So right now it's saying stock market's supposed to go down. And with that payroll number on Friday, I think that's what this is telling us. It's not always 100% correct, but right now it's flashing a warning. And then we look here to the 10-year note, classic bullish, bouncing off the previous top, putting in lower tails when we hit the previous resistance. So what was resistance became support, and making a pretty big move today. So I'd like to see us back above about, on the 10-year note here, about 3.85, and then take out the highs. And that would signal the next wave of this bear market bounce over. And that those charts we looked at on SPY are really just setting up another trap for us, because I find myself even saying right now, we have to just cool off before the next big rally. Did we just cool off? Are we ready for the next big rally? If you want to know more, I encourage you to watch the video that'll come up here in a moment, which was my weekend review and everything I wanted to know to get prepared for this week and where I think we could go. If not, thanks so much for watching, and I look forward to seeing you in the next one. Thank you.